Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Thursday, the 21st of May, 2026. And stop me if you've heard this one before, but the optimism that we saw around potential progress toward peace in the U.S.-Iran war is essentially reversing today, just as we're seeing the impact of that war on Europe's economy. In today's video, I'll break down everything that you need to know ahead of today's U.S. session. Let's get into it. The latest headlines are that the supreme leader of Iran is proclaiming that the enriched uranium the country has should stay in Iran. This, of course, is contrary to President Trump's most recent peace proposal, where it was to be sent to a neutral third-party country. And I want to remind you that this is just the first step, a sort of step along the path to a phase one trade agreement that would hopefully get the Strait of Hormuz open. The nuclear issue is more contentious and likely to come much later. And even here, we're not seeing much progress. And as a result, we do see oil prices on the rise, essentially erasing yesterday's losses. More on that momentarily. Meanwhile, U.S. indices are in retreat. That comes despite solid earnings from Nvidia, the largest market cap company in the world. The bar for that company is so high that essentially even very strong earnings aren't leading to a big move higher in that stock. Now, what are the fallouts of this war? We've started to see some of the impact in Europe in particular this morning. The Eurozone PMIs, looking at the composite number, came in at 47.5. That's below both the reading we saw last month and expectations. Likewise, the UK version of that report also came in well below expectations in contractionary territory at 48.5. Especially if you look at the service PMI figures, those are at essentially the lowest level since COVID. So you can see the massive impact that this is having on the Eurozone and UK economy, something that we're likely to see even in less timely economic data as we move forward. And the longer the Strait of Hormuz remains shut, the more that will continue to weigh on those economies and really on the world economy as well. In terms of economic data this morning, we did get initial unemployment claims. They came in about as expected, and the 4-week moving average of that number is still historically low at 203,000, indicating that the labor market in the U.S. at least remains strong. We have two charts of the day today. The first one is from our friends at Kalshi. This shows the market implied probability that traffic through the Strait of Hormuz will return to normal. And you can see it's been generally trending lower over the past month. And what really raised my eyebrows, at least, was even looking at before September 1st. The blue line on this chart here, it's seen as about a coin toss whether traffic will remain or will return to normal in the Strait of Hormuz. And if we start to see this stretch through the summer, even into the fall, which markets are suggesting is at least a reasonable possibility, that's where we could see oil prices continue to rise. And that's where we could see the economic fallout broaden even further. Even if the Strait of Hormuz were to reopen today, it would take months and months for some of these supply chains and some of these economies to normalize. So clearly a big concern for traders. And that leads into today's other chart of the day, which is WTI Crude Oil. You can see here on a 4-hour chart, it's essentially been consolidating within what's called a symmetrical triangle pattern. So we've been seeing consistently lower highs at the same time that we've been seeing higher lows. This indicates that volatility is contracting. Essentially, markets are waiting for clarity one direction or another, whether that war picks up again and re-escalates or whether we could be on the path to peace. If we do see a breakout to the top side here, we could quickly be testing those multi-month, indeed multi-year highs closer to 120 here on WTI crude oil. Meanwhile, a downside break could open up 85 or 80 in short order. So there's a lot to play for here. And this pattern is nearing its apex, suggesting that we could see a breakout in one direction or another soon, but we will need to see a fundamental catalyst to increase the likelihood that that move will sustain. That is today's video. Thank you for carving a couple minutes out of your day to watch. If you can do me just one quick favor before you close us out, please do drop a like on this video. It's a free way to show your support that helps more people find this video. And if you're not already, please do subscribe to our YouTube channel at FOREX.com. Thanks again, and best of luck with your trading today.